Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in company filings and reveal the real story behind the numbers. Today we're diving into a little something from Verizon Communications Incorporated that has got some interesting shifts in executive compensation. So what is going on here, you ask? Well, it looks like on the 8th of January 2026, the folks in charge of making sure the top executives at Verizon are well compensated decided to tweak an existing agreement with Daniel H. Schulman. This isn't a new hire or a firing, but rather an update to how a big chunk of his pay package will work. Now, what exactly did they change? They're talking about a performance stock unit award that has a target value of around $30 million. This award was originally planned to be given out before the 15th of January 2026. The amendment means this award will now be granted in the first 3 months of 2026, along with other long-term incentive awards given to Verizon's top brass. The big change is the timeline for when Mr. Schulman can actually get his hands on this stock. Instead of an earlier vesting date, it is now set for the 31st of December 2027. Of course, this is all still tied to him staying with the company until that date, which is pretty standard stuff for these kinds of compensation packages. Now let's break down the performance metrics. Half of this potential $30 million award is linked to how well Verizon performs on its adjusted earnings per S-Hair targets. Adjusted earnings per S-Hair or EPs is basically a measure of how much profit a company makes for each share of its stock. So if Verizon hits certain profit goals set by the committee for the period ending the 31st of December 2027, this part of the award will be earned. The other half of the award is tied to something called total shareholder return, not just for Verizon but compared to a group of other similar companies. Total shareholder return is a way to measure the combined value of dividends and stock price appreciation over time. So this part of the bonus means Mr. Schulman's payout depends on how Verizon's stock performs relative to its competitors. It is interesting to note that this portion is split into two even parts with different performance periods. One part is measured from the 17th of October 2025 to the 31st of December 2026, and the second part from the 17th of October 2025 to the 31st of December 2027. This means there are multiple milestones to hit within this second half of the award. So essentially the core deal is still in place, but the performance goals and timelines for a significant bonus have been adjusted. All the other parts of their original agreement are still active. What does this tell us about Verizon? Well, it signals that they are committed to retaining key leadership and are using performance-based compensation to align executive interests with company performance. The extended performance periods for the stock awards suggest a focus on longer-term strategic goals rather than just short-term gains. This is something you often see from companies trying to build sustainable value. This filing is pretty straightforward. It is an announcement about executive compensation changes. There are no big financial statements or operational updates here, but the details of executive pay are always worth a look, especially when millions of dollars are involved. It shows how companies try to motivate their top people by linking their pay to the success of the business. Looking at Verizon as a whole, they are a giant in the telecommunications industry, constantly navigating shifts in technology and consumer demand. Their ability to innovate and adapt is crucial. Compensation adjustments like this are just one piece of the puzzle. We want to see if these kinds of incentives truly drive the kind of performance that benefits all shareholders in the long run. The fact that half the award is tied to relative total shareholder return is a smart move as it encourages management to focus not just on internal metrics, but also on outperforming peers, which is ultimately what investors care about. In conclusion, this report shows Verizon is making adjustments to its executive compensation strategy specifically for Mr. Schulman. The focus is on longer-term performance with a blend of profitability and market competitiveness. It suggests a consistent strategy to align executive rewards with shareholder value creation. While this filing itself doesn't give us a full picture of Verizon's financial health, it does offer a glimpse into how they manage their most valuable asset, their leadership team. Alright, that is our breakdown of this Verizon filing. What is your take on these executive compensation changes and what they might mean for the company's future? Let us know in the comments below. If you found this analysis helpful, give it a thumbs up and subscribe for more deep dives into the corporate world. And don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.